Hey, it's Clay Trader, and this will be a video chart on the XHB, which is a spider for the home builder sector. I've been doing this one just because, as I've explained in other videos, besides the financial markets pretty much being a sector you want to monitor in order to gauge what the overall markets are going to do. The same, I believe, with the home builders. The argument can be made, as I've said in previous videos, that the reason the financials got so bad was because of the housing sector, and I don't think too many people can really argue with that. So this is a chart where this one may be the one that truly dictates how the overall market's going to do. Because as this one gets better, that is implying that the housing sector is getting stronger. And if the housing sector is getting stronger, that should imply that the financials are getting stronger. And if the financials are getting stronger, that would imply that the overall market's getting stronger too. So I'm the believer that even in front of financials, I think the housing sector, and a good one to track that is the home builders, is a great way to measure when this market's truly gonna, bounce and rebound. So as long as this one stays in an uptrend, then it's my personal opinion that the overall markets will also stay in an uptrend too. So let's dig in here and look at the chart. If you match this up with any of the other indices, the S&P 500, the Dow Jones, what have you, you will notice that this chart looks pretty much the same. And no surprise, as I've mentioned, if this chart is having a good day, then if you were to wager a bet that the overall market was having a good day too, you'd probably be right, just because the housing sector is really an important variable in this equation right now in terms of getting us out of the mess. Like everything else, bottomed out in March, went through this pullback, and this is why I believe the overall market's pulled back, because I think the housing sector is pulling either the market's up or down. And then once again, when it bounced, it pulled the whole market with it, and right now is doing some consolidation up here. But nonetheless, chart's still looking halfway decent. Now, the thing that I was debating was, are we in a rising wedge pattern? And that is a bearish pattern. So with this trend line, yeah, you could say we are. But then when you draw this trend line, if you connect the tails, that's not a wedge pattern. So I think we're good in terms of whether or not we're in a rising wedge. Now, had this trend line been something like that, then yeah, this would have been a rising wedge pattern, which is bearish. But with the bounce we've had here and using this lower trend line, that's not a wedge. And I should have noted this, but there's about 40 minutes left before Labor Day weekend here, so the market is still open. So you may see this number change over here, which is the price. And no, you're not seeing anything. The market is still open. So this isn't the final chart, but I'm willing to bet that going into the Labor Day weekend, it'll probably be very mild. And it's already been today. I mean, if you look down here at the volume, like I said, 40 minutes left, and this is all the volume we've had pretty much all day. So not too many people around the markets right now, probably going out on vacation and so forth. So I'm doing the video right now because I'm betting that there's not going to all of a sudden be a huge flow of volume that pushes this up or down. I think we'll close somewhere right around this area. So these are our two trend lines in the short term. Sometimes it gets me in trouble because every short term or time frames are very subjective. But what I'm considering short term is about a month. Medium term is a few months, and then long term would be something like that. But in the short term, so past month or so, what we've been doing is what looks like is forming uptrending channel here. The good part about this channel is the context it is in. What is that context? Well, if we look at the 50-day simple moving average, clearly sloping upwards, which is a good sign, and even our 200-day is starting to round up. It had gone flat here for about the months of July and August, and now in September, maybe late August, you could argue, it has finally started to creep upwards. So we now have our two big moving averages uptrending now. The 50 is much more clearer to see than this one, but nonetheless, this channel that we have is still within a good context. So even during these pullbacks, including this one, you watch CNBC and you see people starting to freak out already. Remember what the context of this pullback is. Bullish. Now, if we come down here and start crashing through these moving averages, then yeah, those people on TV that are starting to suggest the end of the world again, maybe they got a case, because remember what that would imply. if the home builders or the housing sector starts to fall apart, that's not too good. And if this starts to fall apart, that's going to influence the financial sector again. And the financial sector is weighing heavy on the overall market. So keep that in mind. But right now, I think these two moving averages show why the markets have been doing so well. Just a nice bullish context we've been in. And these pullbacks, nothing wrong with those. They're healthy. This was in the short term. This was pretty much a pull or a reversal here. But even in the long term of things, this just proved to be a little longer term pullback, which then ended up being very healthy for the chart. So overall, things are looking good. Just a quick glance at the weekly. You can see here right now basically just getting some sideways action after this 1 month kind of, I don't want to say a mega move, but a nice move here. The other thing to note is look where we're finding support. If I take this line and kind of draw it across, so we had price congestion here, had it here, and when we broke above it, you can see that hovering right in this area. So these two areas, it acted as resistance. It was broken, which made it support, and now you can see it is acting as support. So that's good to see from a weekly chart that this previous resistance area has now officially become good support. So chart acting very healthy, and we'll see what goes on after Labor Day and going into the fall months. So if you do have any other questions, please let me know. If not, I'd encourage you to check out bullmarketnewsletter.net. If you sign up for the newsletter there, you'll get a free ebook, which has been getting good reviews and just gives out some good strategies. You'll also be subscribed and get trading ideas, chart setups, and all sorts of things from small caps to big boards. No strings attached. It is all free, so it's worth checking out. Thanks for listening, and have a good Labor Day.